weekend, all. Hi, Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the weekend as we now get into the 26th of July, 2024. Before you know it, I'll be saying August. It's hard to believe, isn't it? Then I'll be looking out of my window here for snow. I know it sounds funny, but it's true. I mean, as you get older, it just flies by you. All right. So what we've seen, and you don't need me to just point this out, is the rotation. You're seeing the Dow and the IWM getting the bids all week. You've seen people coming out of the Mag 7 stocks. Now article upon article, is it time to completely dump all your NVIDIA? Is it time to be out of Lilly? Is it time to be out of Uber? Is it time to be out of all the markets that were the leaders in their pack, and especially the ones in the tech? That is what you're hearing. Well, don't know. I know that we get, I think it's AMD and Intel reporting this week, so we'll get an idea of what they do. They're not the leaders. The leader is certainly NVIDIA, and NVIDIA for the day today was up 78 cents. You can see that OIH was up. In fact, most of the markets were up. UUP was down. ARM was down. I was looking at that. The autos, they were both lower, and UNG. But everything else you look at, a lot of green in the charts as everything got carried along with the market. Why? Because the market is anticipating now that the Fed has the reasons for a September rate cut, and maybe even a one after that. You know, some people, you'll always hear the naysayers go, one, you're going to get one every meeting starting. Some people are screaming it should be July. I've seen that, and I see Bill Dudley is saying do it now, and he's very well respected. I do. I respect him immensely. I think he's got his finger on the pulse, but I don't think the Fed will do that. The Fed likes to telegraph and be conservative. I do think that they've reached the point where they're not going to hold back. I think they are going to make the move, and I say that because I was looking for June to be a weak month. It is. It's in the book. July looks to me, we're going to get only the jobs data is left, and we'll get that at the end of next week. But regardless, PCE on the weak side, CPI, PPI, all the key numbers on the weak side. That's what you wanted to see. JOLTS. Now we're going to get the JOLTS report coming out. In fact, before I get too far with you, what we have coming out on Mondays, the Dallas Federal Reserve Bank's going to have their manufacturing outlook for July, and that's going to come out at 9:30. Last month was a negative 15.1. Manufacturing is still not on fire. We're going to get the JOLTS report that I just mentioned on Tuesday. The FOM decision comes out Wednesday. Then, of course, you're going to get, after that, you're going to have your jobless claims, ADP, Challenger Gray, and, of course, as I said, Friday, the jobs report. But I don't think any of these are going to come out so strong where the Fed won't take the months of June and July and say, they're going our way, they're coming down, and if they get one more set, the set for August, when it comes in, by the time September rolls around, I think they're going to say they're comfortable and things are worth at least giving you a 25 basis point cut and then pausing for a little bit. What happened? And maybe they go each quarter. It's hard to tell what they'll do, but I think they have the reason to move, and the market's not going to wait for that. The market is anticipating this. Now, it would not surprise me, and I want you to listen to this, that when they make their first cut, you don't get a little euphoria, and then the market sees the bottom come down, and then we rally into the end of the year after we bounce from that. And you'll say, why? It's the old buy the rumor, sell the fact. It's that's all that I'm saying. Would I be bearish? That's not what I've said. I said you will get somewhere along the line here corrections. You're already getting them. You know, I was looking at CrowdStrike. It's down with today's close over the past 3 weeks, 38%. So they have been punished. You're looking at the airlines. They're all getting punished as you go here. Automakers, they're getting punished. So not every sector is making its move to the upside. One of the sectors that I am looking at is XLU. And this is what I'll call a trend line to the upside. This was your trend line down. You had an apex that formed. Once you cleared these highs right here, the market spurted to the upside as traders said, okay, that's good. You fell back, you found your support against this line, and you're basically still there. When we put the swing line on the trade, you can see how you've got the clear pattern of higher and lows from right here. You got higher lows, but you've had lower highs. So to spur on another move up, you've got to get over 71, 72, and you did it this week. This week's high, 71, 78. So you've got the pattern where you're keeping this all alive. You had a pullback for a moment there from that high to the 71, 72, and this week you took that out. So in order to tell me that you're going to stall the market, you'd have to get back under 69.42. When I put on the chart the 18-week moving average, which is this red line, you can see that it's moving each week. I'll give you an idea here. 40-cent drop roughly from 56 to 19, roughly another 40 cents. So you're probably going to be up in the neighborhood of 69.37, something like that. It's going to be very close to that low of 69.43 that you've got. The market's got the pattern of the 100-day average is underneath the 200. So this is not a classic bullish setup. Why? When you have a classic setup, you have the 18-week over the 100 and the 100 over the 200. That is possibly going to happen as rates, as I think, are going to start being cut. When you look at the Bollinger Band, it's a potential target for the market as I'm reading it, around 74.14. So when looking at the chart, I don't want to see 69.42 taken out. If it is taken out, wherever the 18-week average will be the initial support. If the market keeps moving to the upside, I'm looking for resistance there. And I have a market that's already sees this and it's overbought. I view any readings in the slow stochastic over 70 is overbought. You've got both the K and the D line, both over 70. It is the same formula. The difference in the formula is the K line uses 3 periods of value, the D line 5. That is the difference. Next, we look at RSP, which is the S&P 500 equal weight. Now, that is not the same as the S&P 500 index. And the market had a big spur over the last 2 weeks, got up to the Bollinger Band, got thrown back, and now the question is, can it keep going with that? As you can see, the market's overbought. That is not a sign to be bearish, but it's also not a sign that the bulls are deploying money in this right now, where they're deploying monies in the Dow, in the IWM. In Lilly, look at how this got thrown back. It rode that Bollinger Band, and when it finally lost the bullish embedded reading, and we can do this together right through here, okay? Here's both numbers over, and I think you see that 80. As soon as you lose it, the odds are that you've lost your upward momentum. The first logical spot to go is the 18-week average, or the closest of the main moving averages, main being the 50, the 100, the 18, it should be in this sequence, 18, 50, 100, and 200 day. I don't show you the 50 on this. It'd be too many lines for you here. I show that in my morning subscriber video. You could see you went down to it. You could go lower. Wouldn't surprise me. But what it's really doing is, like so many of the trades, be it the copper trade that didn't pan out, be it gasoline, which was going to be the summer driving month, didn't pan out. I can go on and on. There's plenty of trades that people thought would be the big winners, and some were. And those that were, NVIDIA, in a correction right now. Others, correction. CrowdStrike, perfect example of it, all right? When you come to CrowdStrike, I was looking just before I was recording this, and I added up the decline. It's 38%. You're down to the lower Bollinger Band. You're at the zone on a weekly chart being oversold, where anywhere from here, the market's going to start looking for footing. Does it mean it has to stop here? No, but what are the odds? I think very strong. Am I saying go and buy? No. If you were short, though, I am saying, how's that? I'll stick my neck out, cover all shorts. There's the difference. In ARM, we just slid through everything here. You lost your bullish embedded reading. I'll be surprised if you don't hit the 18-week average of closes. Meta, wasn't this one of the leaders? Tried to be. The big rally was back here. And this market sort of ran out of steam in the March-April period, came back one time, and has just gotten hit also. And if you take a look at what I mean by that, if we take a look, here's the first week coming up of a decline. Here you were up, down 7.6%. Down 4.43, so you're in a correction now. You're over a 10% decline from the break, and down another 2. You can see what I'm getting at here. This is the market in the correction phase, and we're seeing that in a bunch of markets. Remember, a correction is defined from a recent peak breaking 10%. Got it? That is how analysts will look at it. And you're in a bear market if you go down 20%. Then the market has said you've lost your bullishness. You're there. So I could argue that this makes sense because you're caught in the sideways action of the Bollinger Band. You were overbought and you've lost that now. In KRE, as much as I didn't like the regional banks, I realize why they're on fire. I have repeatedly said they got a lifeline. Interest rates, which many were talking 6 weeks ago, that the 10 was going to go to 6%, go back to your news headlines. Take a look. You'll see what I'm saying. Long-term calls, we're going to 6. Well, we're 4.243 right now, 4.2.3. That is not that. You're 4.2, in fact, I think today at the end. All right? And this is a lifeline because banks watching this come down will say, okay, yes, we have some commercial real estate, especially the regional banks, but they have been putting money away for it. This is a glacier coming at them. They realize it. There'll be some losses. There'll be some deals being made. There'll be wipeouts of shareholders, but not the bank. They'll try to make sure, as best as they can, that they've got reserves for the losses they'll inevitably take, and I think they're probably there. And the market, well, I think it's getting ahead of itself. It went right through the 200-day average. It's probably getting overdone on the first challenge. MCHI, I am still bearish. I have been bearish in telling you how I don't believe in what China's doing week after week, and so far the market has caught up with my thinking. And do I think we can get here? It depends. The way China can stop this is do something really big. What they keep doing are programs that don't make sense. Their idea of their $41 billion, take your car, trade it in, we'll give you brakes of all types, you can get a new car. They're trying to do everything industrial there, but people look at the value of their home like anywhere else, and as it keeps plunging in value, they don't feel comfortable going out and getting that new car. That is the problem that you're getting there. And they're looking each week and they're seeing how the economy's slowing down. And as much as China wants to shield their people, do you honestly think they don't realize that they have big fights with the West in tariffs? Europe, the United States, and suddenly the best friends are Iran, North Korea, and Russia. I don't know how the people feel about that. The Chinese I've met and talked to, and there's plenty all over the United States, they're not of the favor of that from what I'm running into. That's my small world. Understand that. When we take a look at the sideways action in the industrial sector, as bad as everything is, because we keep getting it, each regional district isn't coming out and their numbers don't look fabulous in industrial production, yet this market's in an uptrend. So something else going on. I realize the numbers there, but what's going on? The market's saying low interest rates are going to spur on the activity. That's what's happening. When we take a look at XLE, have you been watching energy prices? They've been working down. Yesterday surprised the heck out of me with the rally that you had in the heating oil and in the gasoline. I didn't understand it. And today, to prove that I wasn't crazy, the market crashed at one point in the heating oil market. I was watching it going, I don't get what yesterday was all about. And I still don't get it because I'm not seeing the demand come on from everything that's going on. So we've rallied into a resistance point at the 18-week average of closes, and that's about where you're at. In the dollar, you're sort of stuck right here. I think the market's waiting for the jobs report, the FOMC statement. We go into the two-day meeting on Tuesday. We'll get the statement, and we'll get the press conference on Wednesday. That'll probably bring that market alive. In the gold market, well, you went right up to the upper band. What do I teach you on the first time you hit a Bollinger Band? What I teach is if the market's not in a tight range like that, this is different than this, where I have to open my hand all the way. The tighter the range, when you hit the band, you might keep going, but you still take money off it, the way I teach it, at the first time you hit it. If you're embedded, you only take off parts of the position. You let it run. And when you lose the embedded reading, you start stepping out of the market. And that's exactly what occurred. You had one kickback in the market, but momentum's down. The price was up. They're not in sync with each other. In the copper market, still the weakness, all right? And we see that. We see it in terms of when we're looking around at our, as I said, our Fed districts, and we keep getting out of the regional districts the manufacturing numbers. They're not strong, yet the market's anticipating that strength. And in China, no strength at all, and they're coming down. In fact, everything China buys is in trouble. I do Australian TV on a regular basis, and we talk about that as they pull back, as they don't need as much. I realize they want to be an industrial powerhouse. Problem is, what they're selling has to go to other countries. Europe is not going to accept the cars with the subsidies the Chinese government gives. It'll destroy their local market, as the United States. AMLO in Mexico is already arguing, saying whatever administration comes in, nonsense. They won't slap tariffs on cars that are manufactured in Mexico, even from Chinese companies, and hurt themselves in America. Depends which person gets into office, Mr. AMLO. It could be not different than you think. So you put that all together, you come up with game plans. I went one chart too far, sorry about that. And you have something to do. Now, I talk about this in the mornings. My idea, and please stay, is to give you an idea for a trade. That's it. It's an idea. I don't manage your money, not interested in managing money. I have enough to do running my business and the other things that I'm doing. But when you take a look at how we put this out and what we do, it's exciting. Because each morning I'm picking up new charts. I rotate my charts during every month, a couple of them here and there. I won't take you away from the basic things you want. People love the spiders. They love the ETFs that we show. But I can rotate the stocks, and I try to move to the hot and cold ones all the time, looking for where there might be value. Like I've been telling traders, and I've been saying it for a month. When you hit 160 in Boeing, I said, what's your real risk? I don't think this company's going to be in trouble for a long period of time. They're going to be able to deliver planes. Well, China opened up for them, and they're back into the 180s already. NVIDIA, yeah, it's coming down, but it's the granddaddy. It could go to 105, and I show why when I do this. In the futures, we talk about what's going on there. Where's the action? What's going to carry it? So 40-plus futures charts every morning. I record about 6 in the morning, and you get that bright and early as you're waking up and the markets are ready to go for most people. And I record 40 in the stocks and the ETFs and so on. Always with trade recommendations. In fact, when I put out the trade recommendations on the SPDR ETF, I send you them, and then I record. So you know what I'm doing just before the recording comes out, and it tweaks your interest. I hope you see that. So we will cover how that is, what it does. What do you have to lose? Go to our website, iraepstein.com. Give it a try under the research area. Move your cursor up here. You'll see iraepstein.com research. Click it. Choose the package you want. Away you go. I'll see you all come Monday. You have a great weekend.